Welcome, guys. We are so excited that you're here with us today. We can't wait to share what we have learned all these days about Microsoft Voluntary Retirement Program. I'm joined here by with Erin Strand and Alex Castaneda. And
I'm a webinar regular with Lars, so if there's any clients on here, they've probably seen me a time or two.
yeah, we are so excited. Um, let's dive right in. So for the agenda today, we'll look at the timeline, folks who are deciding whether they should take VRP or not. We'll look at the package details and then we'll talk about the top 10 questions we are being asked by eligible folks.
We don't have to stick to just 10 though. So if folks
Yeah.
have questions, they can throw them into the Q&A at the top.
Yes. Let your questions roll in as we are talking, and we'll get to your questions towards the end.
Great. Real quick, just to go through the timeline here for the voluntary retirement program. Some quick dates. Really, the key date here, June 8th, is the big one. That's the deadline to elect to opt in to the package. June 22nd, that is when you would need to have signed the agreement. June 29th, apparently, deadline to rescind your signed agreement if you change your mind. Not sure how that will look optically in with your team, but apparently that's available.
Yeah,
Wouldn't
I think
recommend.
of all the things that we don't recommend doing that. So we need a
Yeah,
solid plan in place
by
and
June.
feel really confident about that. Yeah, we don't want to be backpedaling
So
Yeah,
essentially,
June.
thinking stops after June 8th.
Yes. We have made our decision. We planted that flag in the ground and we're moving on.
yeah. July 1st, last day of active employment, and then July 2nd is that official separation date.
Perfect. Which
And
is wahoo, maybe.
yeah, and then we are hearing what we are seeing, what we have read is most payouts will happen 30 days after the termination date.
Yeah.
Okay, so how do we, the biggest question we have been getting from folks is how do we think about healthcare? Because it is probably the biggest line item expense that will show up on your cash flow.
Yeah. Healthcare is probably my biggest concern for families. If you are under Medicare age, or even if you were ever thinking about retiring before age 65, healthcare is an incredibly expensive line item in cost. So it's really important that we plan around that. Private insurance is expensive, so we want to make sure that we've worked that into your plan and into your budget. I think it's incredible that Microsoft is offering premiums to be paid for those first 12 months. Um, there's a bit of a gotcha with some of that. So if you are close to age 65, we encourage you to pause and really evaluate how that benefit may be impacted. Um, it may not be the full 12 months of premiums paid for you if you turn 65 in that period. So, not the end of the world. I actually love Medicare. Medicare, you can get great coverage and it's relatively affordable. So that could be a great solution. It's just for families and dependents, it can create a little bit of chaos. Again, not the end of the world. It's just better that we know those things now so that we can thoughtfully think through our timeline and figure out from this period to this period, I'm on the Microsoft coverage. From this period to this period, I'm on Medicare. Maybe my family is on a different plan, and this is how I'm going to address that. We work very, very closely with health insurance experts. They help us navigate the exchange because it is state specific. So it can get kind of complicated if you're having to go that route. So we just really want to think through every family's individual circumstance because they can be quite different.
And I would say even if you're not necessarily close to 65 and being Medicare eligible, after that first year of coverage that's paid by Microsoft, years 2 through 5, really, we still expect to be a pretty significant line item in terms of
Yeah, it's about
expense
$2,500
to
a
you and your
month.
family.
Yeah.
So, um, yeah, don't think that for the full 5 years you're getting really cheap coverage provided by Microsoft. It's good coverage.
Correct.
But after that first year, it is still likely going to be a pretty significant expense if you are younger than 65 in Medicare.
Mm-hmm.
And I just want to add, Erin, you said if you are close to 65, then it is nuanced. If you are 48, then it needs to be well thought out because you have a longer runway until you become eligible for healthcare. So you're thinking about how do how do you pay for those premiums?
Yeah.
Um,
And you're
uh,
mostly going to the exchange and having to navigate that
yeah,
at the end of the 5-year period.
yeah, and many people that we talk to, um, they are used to the Primera Blue Cross insurance that Microsoft provides, and they want to keep those good healthcare benefits.
Yep.
Great.
Ooh.
We have been hearing this question a lot. Will I get my annual bonus or not? Um, and we have heard from a lot of folks, and we have done our research, and it does sound like most people will be eligible for their annual bonus and they will get their annual bonus. Now, we can't say if it is going to be 100% of what they received last year. It could be some range, but we think that you will get your annual bonus.
And I think it's important to note it's definitely not explicitly stated in the VRP documents that these folks will receive their annual bonus, right? So we fully would expect, because if you opt into the package, you're working through July 1, the entire fiscal year, that goes towards your annual bonus. So we would expect that folks should receive that and most likely will. But I just think it's worth pointing out it's not one of those three big line items that we started with in terms of what the severance is made up of for the VRP.
Yeah. And when we plan with most families, the bonuses are never guaranteed. So
Right.
there's always a little bit of
Right.
gray area around any bonus.
One of the question we're also getting is if we do get bonus, can we use that bonus payout towards 401k contributions or towards the DCP contributions? Based on what we see, probably not. We still need to confirm that, and that is something we are working closely with people who are eligible and helping plan that out. This is a big one.
This is the question.
Yeah,
I think.
maybe the biggest question.
Yeah. And there is so much that needs to be well thought out before you make that decision to step away from your job that brings your paycheck. We think about the spending number that you have that'll come every month. Are your assets set up to pay for that for long term? Um, that includes healthcare, um, just if you have kids that needs to go to college, your travel budget that you didn't need to probably plan out before for because you knew the paycheck is coming and you'll just pay for that. And also the wide swing in ages. If somebody who is in their late 40s versus somebody who is in their mid 60s, that answer is going to change.
Yeah.
There is so much to think about.
And I would just say that this is really one of the parts, but this is what we do, right? We build out that retirement plan for folks that are weighing this option, because like Saloni says, there's so much that goes into it, so many things to plan for over the course of really the rest of your lives, right? If we're talking about retirement, and so it's obviously going to be different for every individual. It's interesting. I was talking to someone before, a Microsoft person that was weighing the option, and they were saying, I think this is a good opportunity for a lot of folks to evaluate if they're ready to retire in general, but I don't think the VRP is going to necessarily really create a retirement for someone, if that makes sense. So we'll see. It depends on person to person, but I think nonetheless it's a good opportunity to really dive into that now and see if retirement is feasible for you.
Mhm.
I think that's a good point. Like 39 weeks of pay isn't solving most folks'
Yeah.
retirement plan. So it's nice, but it if you're ready, it's nice, but it's not going to close a gap for you if there is one.
And it is pretty consistent with what I've been hearing with folks that I'm talking to. At least half of them said that they were thinking about retiring. They were wondering if they could step away. And this package has just triggered the event. It has just preponed that timeline for them.
Yeah.
So maybe was the answer there.
Yes.
Okay.
This has been an interesting one. What's the break-even timeline between taking the VRP versus staying with Microsoft? Um, I know a lot of Microsoft engineers and other folks love a good break-even point. And so we have been trying to help folks that reach out really look at different scenarios, whether it's take the VRP versus stay at Microsoft through the end of this year versus stay at Microsoft for one additional year until next summer. And what we've been trying to do is really put a dollar value into each one of these scenarios. What is the total dollars in your pocket from Microsoft in each of these scenarios? Um, and so again, that's going to depend on what your specific VRP severance package looks like. It's going to depend on if you're 55 and 15 eligible. So if you'll get continued Microsoft stock vesting beyond the VRP. Um, and so it varies from person to person. It's also going to depend on if you work through next year, are you then laid off at that point and get
Yeah.
some other form of severance or not? So what we're seeing in most cases, I think, is if you're able to hang on and hang in there till around this time next year, typically we're seeing that will have been the better option than taking the VRP now in terms of dollars in your pocket.
Mhm. And there are so many unknowns with that. Uh, if if there is another round of layoff in 6 months, or if there is some sort of PIP put in place, that could change the situation. Like Alex mentioned, at a high level, just purely looking at the payout and comparing the numbers, um, staying 12 months is probably you'll walk away with a higher payout.
Yeah, and worst case scenario is probably you decide not to take it, and then later this year at some point you're for whatever reason maybe put on a PIP or terminated, and there's no severance, and then of
Yeah.
course you're kicking yourself, but of
Yeah.
course we can't predict the
Yeah.
future either.
Because
So
this package isn't meaningfully different than a severance package. There's a couple little
from risks
tweaks.
we've seen before,
Yeah.
yeah,
Yeah.
Yeah.
healthcare is the big difference.
Yeah. So 6 extra months. So
Yeah,
it's
And I think with this, just talking through this, it brings back that the bigger question is, can you truly retire? I think that is leading the decision more than what you're leaving on the table. If folks are set that we want to retire, we were thinking about it and we can afford it, then we can work the numbers through and we can show what it looks like. But this is probably not going to lead the decision
yeah.
making.
I think one conversation I've been having with families too, for those that are leaning to take it, is just to be incredibly honest with yourself about the likelihood of getting another job. So I've heard I'm going to take it and then I'll take some time and I'll get another job. Um, just, I think really think about what that might look like for you, for your family, and my advice in that situation would be to make sure that your retirement plan supports that not materializing or not materializing at a similar compensation level.
Mhm. And
It's
that's a
hard to go back. Sorry to interrupt.
that's a good point. And I had this conversation with one of the BRP eligible um, folk at Microsoft, and we looked at the plan, and it turned out that they wanted to step away from Microsoft, but they would need to go back to a job, maybe not making similar amount of compensation that they are now, but what is that they need to make absolutely to step away?
And we can help solve for that, which is
Yes.
awesome. Because sometimes you don't need those as big of a salary. Sometimes we just need enough salary and healthcare.
Exactly.
And if that works, like cool. Less stress, sign me up.
Yes. Okay. What are the risks if you decide to push the button on June 8th? Well, like like we talked about, the spending is probably biggest risk. You may think that you spend X amount of money, but in in reality, it could be something a different number.
Yeah.
So getting really honest with yourself, how much you're spending, and then aligning that with how many assets you have.
Yeah. I've been telling people when we're starting to build out this retirement scenario, this is the time to finally take that deep dive into maybe 2025 in its entirety and look at, okay, what was my actual spending over the course of a year? What were my expenses? Because everyone has a number, I think, in their head when we ask, well, what does it cost you to live each month? And you kind of have this ballpark idea in your head, but what we find from working with folks for a long time is and probably ourselves included, right? Most people tend to underestimate
Correct.
what they spend, and that can be a risk to a long-term retirement plan, is having that assumption wrong, right?
Mhm. Yeah, and one of the other risks that comes to mind is if your portfolio allocation is not aligned to support your cash needs for future years. For example, if you have single stock concentration,
Hmm.
a lot of Microsoft in your portfolio, then you are kind of relying to sell those stocks to fund your lifestyle expenses, and that could pose a risk.
Absolutely. You need the investment portfolio to be aligned with the financial plan, and particularly when you might need to start taking withdrawals from that nest egg that you've built up your whole career. Um, the yeah, absolutely need to align that allocation with the plan.
Perfect. Many people are asking, we are so used to getting a paycheck per month, but if we decide to step away, where will that paycheck come from? How should I think about it? Um, Typically, we work with clients and we help design a paycheck after they retire. We think about three major buckets. Money will come from your portfolio, and your portfolio is between taxable portfolio and tax deferred, which is your 401k, your DCP accounts, your IRA accounts, and tax free, maybe your Roth account. So that is still one sort of your portfolio. Um, then, depending on your age, Social Security will come in. That'll start adding to your paycheck. IRS also forces you to take required minimum distribution, which is far out at the age of 73. That still comes from your portfolio, but that is forced paycheck design that'll come. Um, it is nuanced, and as we talked about the risk in your portfolio, it is super important to make sure that your portfolio is well set up and well built out and tested to support your cash needs to design that paycheck for how many ever year you need.
Yeah.
Talking about your portfolio supporting your cash needs, one of the questions we have been hearing is, oh, most of my assets are in my retirement account, but we know that we cannot access that before 59 and a half, before I turn 59 and a half year old. How do I think about that? There is this rule called Rule of 55, where IRS says if you are separated from your service and you are 55-year-old, then you can access your 401k account money without any penalty. You still owe taxes as you would owe on withdrawals,
Never
but
get away from that.
No.
uh, so it is good news. It is slightly nuanced. You have to make sure that you don't roll your account over into IRA, then you cannot access it.
Yeah.
And um,
I think this just supports like the really important cash flow planning and modeling that we do on the front end. So a lot of like what you were talking about before in terms of how do we create that paycheck, we flow things out, right? We look at all of the assets, we look at all of the income sources, then we help model and plan that out. So for us, we see this coming and we know there's a potential that we need additional cash flow or resources. So, um, making sure you have that plan put together, I think can avoid somewhat of a catastrophe if you were just making decisions quickly without really thinking through the next 12, 24, whatever months ahead. Um, you can put yourself in a bit of a pickle. So it's important to get those cash flows and forecasts going.
Yeah, and one important caveat to this rule is you can only access your current company's 401k account. If you worked for a company 15 years ago, and it is still with that company, that cannot be accessed with this rule of 55.
Oh,
That's a
Taxes,
big one.
taxes, taxes.
could be high
Yeah.
in
Probably.
2026 if you take this. Yeah.
Yeah. What's going to add to income in 2026? What would make you think that it's going to be
I
higher?
I mean, you're getting for a lot of folks, they're getting up that full 39 weeks of base pay as a lump sum in
Which is a
July if they take this.
which
That's
is a lot. It's how many
9 months
Yeah,
or
Mhm.
we did the
about.
math.
Plus, you'll have worked the first half of the year, and so your taxable income is going to be higher than it would have otherwise been if you just stayed at Microsoft as an employee through the end of 2026. And I think we'll touch on deferred comp specifically later. Um, but if you are level 67 utilizing deferred comp, that's also going to have a huge impact on your taxable income, right? So it could be a high income tax year. There's ways that we could help reduce taxable income. The quick, easy one is the pre-tax 401k. So we've been telling folks that are going to take this that they should immediately log into Fidelity Net Benefits, go to the 401k, try to maximize the pre-tax contributions. I think 65% is the max that you can
Yeah.
contribute to the 401k. So want to try to take as much advantage of that as possible. It's also going to allow you to maximize Microsoft's company match
Yes, free money.
before
Mhm.
you head out. So
Yeah.
Free money and reduces your taxes.
yeah,
Win-win.
yeah.
Some of you have your Microsoft stock not just in your taxable account, but also in your 401k account. And what we have been hearing is we have heard of this net unrealized appreciation strategy. How does it work and is it for me? Is it for you is a very nuanced and technically involved decision that we are helping folks think through with. But at a high level, this strategy is essentially you avoid paying ordinary income taxes, which is a higher tax rate, 22%, 24%, or 37%, and you trade your Microsoft stock for a lower capital gain. It could be 0% depending on your income, or 15% and 20% plus net investment income taxes.
Yeah. I think the big takeaway here is if you have Microsoft stock in your 401k and let's say it's from a long time ago and it has a really low basis, this is well worth the analysis which we provide in that situation of is it worth pursuing NUA versus just
A broader
broader
diversification.
diversification within the 401k, but potential tax benefits down the road by utilizing this strategy for sure.
It's just so specific to each individual. So our advice is if your friend says they did it, that might have a completely different fact set than you. So you have these decisions have to be evaluated per person. There's no general statement that says if you have low basis company stock within your 401k, you should do anyway. That is not necessarily applicable to everyone or true. So we just want to make sure that we really understand what the trade-offs are, and we love a good break even here. So,
Your friend did it.
but your friend did it. I know, and might have been the best thing they ever did, but you know.
And also, there are so many things to keep track of. So IRS really likes details, and NUA is one strategy where you have to keep track of
Yeah.
when did you buy the shares, what is the cost basis, when are you converting. So it is very technically involved strategy too. We do recommend working with advisor and with a CPA if you're thinking of going down this route.
Absolutely. Does a Roth conversion make sense in my situation? I feel like that's another maybe. What do you think?
It's a maybe. It's a maybe. It depends on your income, your long-term plan, what kind of assets you have in which account,
Mhm.
and do you think you're going to have enough for your lifetime and you want to transfer some of that money to your kids tax-free?
Hmm.
So there are so many things
Yeah.
to think through with this. Um, but at a high level, if you think you are going to be in a low income year, which is not 2026, if you
Yeah.
are taking the package, uh, then then um, then maybe next year or following year when you think your income is going to be really
Or
low and
maybe
you
after,
have
if you're 55 and 15 eligible, maybe after those next 3 or 4 years of
fall
continued
off.
stock vesting too.
Yeah, that's true. And you have enough taxable assets that can support your lifestyle, then maybe Roth conversion could make sense for you. It's a good strategy because the dollars you convert would grow tax-free and come out tax-free even for you when you need it.
Yeah, I think about folks in that scenario where they're on the earlier side, retiring. They haven't started Social Security yet. They're well before the required minimum distributions from the IRA. Maybe there's no income necessarily, taxable
Mhm.
income that they are receiving each year, and those are the great years to look into Roth conversions.
The
Yeah,
golden years.
Yeah.
exactly. That's what they call
Yeah.
it.
Now we do.
Question 10.5. We had too many to narrow down to just 10.
We're so
How
funny.
does VRP impact deferred comp?
Yeah, this is kind of ties into the what's the tax situation in 2026, but it could have a big impact. So if you were utilizing deferred comp this year, the severance will not be eligible to go into deferred comp. So again, we would expect your taxable income to be quite a bit higher than you probably had planned going into the year. And then the other thing to think about is the payouts. Those payout schedules are essentially set at this point if you're opting into VRP. If you made any sort of adjustments to previous payouts that you had elected, if you did not make those before, call it July 1 of last year, then those changes will not stay in effect. So anytime you make a change to a payout in deferred comp, you have to stay at the company for the next 12 months for that change to stay. Otherwise, it will revert back. So just a heads up there.
Yeah, that's a good nuanced way to think about it because it can add to taxable income and then more things to think about how to
Hmm.
leverage some of the tax strategies.
Yeah.
Which is why I hope people were working with us before they were making those payout elections. It's in another webinar.
Um,
Great.
okay,
Perfect. We've got some questions here. Do you want to take that one, Saloni?
yeah. Um, what do you think the likelihood is that Microsoft will change its layoff terms given how it compares to other tech companies?
This is where I have my crystal ball.
It's so hard to say. The landscape in these big tech companies is changing every 6 months to 1 year. It's so hard to say. AI is growing at the fastest speed. The companies are realizing they need to pivot. It's just so hard to say how they're going to think about layoff terms. Um, we do know that Meta also is laying off a big workforce today. Um,
Thousands of people were laid off this morning.
yeah,
Yeah.
we know that Microsoft has been a company that likes to take care of their employees and has been in their corner.
Yeah.
Uh,
I think the biggest signal that Microsoft is maybe, I always say like Amazon for so long was kind of that like more cutthroat kind of environment. Then Meta came along and set a whole new bar for corporate culture. But I think what we see within Microsoft is just this gradual like decay and pullback of all of these different benefits. And I think one thing that signals to me like thing the severance packages might change is just their overall structure on their performance metrics and just
Hmm.
removing straight up like there's no 120 anymore. So I think
Maybe the emphasis they're putting on this being like a unique offer too. Maybe later they'll say we gave you the VRP
opportunity,
and now
yeah.
our severances going forward aren't going to be like they used to be. Who
So,
knows?
but I don't know. I don't have as like, yes, I'm not confident in anything, but I think we are all seeing the writing on the wall. The tune, it is changing. So, and again, I think that that's where we as individuals, especially if you're in Microsoft and you're about, you just need to be really, really honest about where you're at professionally. Some folks won't have much choice. They need to stay because they have such a long time horizon left to retirement. If you're really close and you have met with your team and you know that you can take this, I probably would encourage you to do so. I don't know what these offers will look like going forward. So
Yeah, and it is one of those things that we emphasize on controlling what you can control. You
yeah.
can control your own financial plan, your own
Mhm.
retirement timeline,
Yeah.
your own saving and spending. We don't know how companies will come up with layoff terms and plans and severance package
Yeah.
and how many people to let go. Um, so just thinking through that. Couple more questions we received on webinar is what is the tipping point in decision-making process? I think we addressed that, sort of talking about what is a break-even point. So the tipping point would be if you're purely thinking about VRP package, I think comparing if you took the package today versus if you stayed with a company 6 more months or 12 more months, or 24 months. That only you can answer
Yeah.
that because you know your own timeline. Were you already thinking about retirement? Yes or no? And then you quantify what that bottom line number is,
Yeah.
total takeaway.
Yeah.
Yeah.
And that's pretty easy for us to put together once we
Yeah.
know your specific information.
And I think that's like one component, right? For me, the tipping point isn't just which scenario gives you the most money. Like that's cool and everything to understand and it's helpful, but it's can you afford to do any? Like which one of those can you afford to do?
Yeah.
Because you may be in a position where you're like, I have to take VRP, but then it's going back to your plan and understanding what do you need to do next to make sure that you can retire comfortably.
Yeah, we have another one. They asked, what are the realistic healthcare costs that we should think about with Microsoft VRP extended healthcare package after it drops off?
So right now we have the 2026 Cobra costs, and for a family, it's about $2,500 a month, um, which is not cheap.
Yeah.
I expect those to go up though, because that's today and they will inflate. So I imagine when everyone that takes this package goes to enroll, they'll probably be a little bit more, the premiums will probably be a little bit higher at that point in time. Um, if you make it through the entire 5-year period and then you're going to the marketplace, I expect premiums to probably be somewhat similar to what you're paying now, but the big difference is you probably won't have as good of healthcare coverage. So you're going to pay about the same amount of premium, but have a less robust policy.
That is helpful. Um, Great.
I don't see any other questions.
Awesome. So we wanted to make sure we shared a visual here of our Avier team. We have a very qualified team of lead advisors, associate advisors. For those of you that do work with us, know that we really take that team approach to serving individuals and families. Hopefully you can understand from this today how detailed and in the weeds we get with families and really trying to not just it's not just investment management, it's not just financial planning, it's not just healthcare planning. We're really trying to put our arms around all money decisions and working very, very closely with families throughout their retirement, whether it's creating your long-term plan, structuring income and that paycheck in retirement. Um, I always say this is the best team out there. And so we're happy to have everyone reach out and connect with us. If you have questions, we have, I think on our next slide there, we got a,
Yeah, and I do think that because we work with Microsoft community hands-on, we are able to help folks think through this decision and are able to pivot. And this is also our way to help people. We believe in education and giving back to community. We do encourage if you need a sounding board, you scan the QR code and set some time with us, and we are happy to help you think through.
And really and truly, we're clearing our schedules essentially for VRP folks here in the next 19 days because we know it's
mission
that
critical.
deadline is coming fast and it is a huge decision. And so we want to give everyone the chance to reach out, connect, let us kind of run that analysis and be that sounding board for you.
And I think specifically the three of us are like really trying to make sure that we're available for this. We know this is stressful, like really and truly stressful.
It's a big decision.
It's a very big decision. And like not to go too much into the emotional side, but for those of you that have been here for a long time, Microsoft is part of your identity. And I think stepping away from, most of the folks that I work with have been there 20, 25 years. I was a child, a teenager when they started. And so to have worked somewhere and to have gone through all of these seasons of Microsoft and to contribute to something for so long, I think to step away if you feel a certain way about that. And, we're not always just talking about dollars and cents. We understand that there's other things that are tied up in these types of decisions.
Yeah, absolutely. It is as much as of a financial decision as it is emotional.
Yeah.
Yeah, we are happy to be in your corner.
Great. Thanks, everyone.
Yeah,
Yeah,
thank you.
Thank you for being with us.